Welcome back. Tech closing out the year as the best performing sector on the S&P 500. And Dan Niles from Alpha One Capital Partners joins us now with some of his top picks for the year ahead. Dan, very good afternoon to you. Thanks for joining us.
Thanks for having me on, Wilford.
So before we get into individual stocks, what's your overall level of positioning in terms of overweight or underweight to stocks at the moment relative to where it's been at various other points during this past year?
Sure. What we've done actually is, as the market has sort of rallied into year end, we've been going ahead and selling stocks or shorting names to get ourselves to more market neutral. We actually put out a tweet on December 25th and talked about the fact that if you go back to about a year ago on December 24th, the market's up about 37% from its lows on December 24th in 2018. At these levels, you've had tremendous amount of multiple expansion. The S&P multiple has gone up almost 30%. There's been 1% earnings growth, so the rest of it's multiple expansion. And I think when you start January, especially as you get close to February 3rd and the Democratic Iowa caucuses, that the market may have a pullback of 2 to 5% when we get into January.
How does your positioning in Apple relate to that overall positioning?
Yeah, I mean, we're still long Apple. I mean, we've been long Apple off and on all year. Actually, Apple's one of our top 5 profit contributors to the fund this year. And actually, we've generated 25% of our profits, believe it or not, from the short side, from being shorted at opportune periods of time, like in early May, when people were just too bullish on the trade situation, in our opinion, and Apple stock went down 13%. If you look forward from here, though, Apple stock is at a decade high nearly in terms of valuation. The 80% move up in the shares is totally driven by multiple expansion. But I think the good news is 5G phones coming later this year. They're going to see strong demand. The question is, what is Apple's profits going to look like? Because unlike this past year where you've had semiconductor component costs absolutely cratering, you've now started to see memory costs starting to go up. So we're long Apple, but we like a lot of other names a lot better than Apple as we think about 2020. Names associated with Apple, like our top pick Lumentum, but not necessarily Apple itself, because they're really going to have to put up some very good numbers given the multiples at a decade high.